and welcome. It's another evening of frank conversation here on Hard Copy, coming to you from our studios in Abuja. I'm Maupe Ogun Yusuf. It's almost Christmas, and I know a number of people are getting set for the holidays. But right after the holidays comes reality in the form of school fees for many parents. And that's not something our parents look forward to. But they know it must be done. And for the children who have parents to worry about these things, it's a privilege indeed. And for students, particularly those in tertiary institutions who have to carry this burden themselves, they know it's not easy. And so a number of people have thought it was a bright idea for the federal government to introduce student loans, which could help students lift the temporary burden of paying their fees and give the universities the latitude to reflect the true cost of tertiary education, which some believe will elevate the falling standard of education in many public institutions where funding continues to remain a challenge. However, last week on the program, we heard clearly from the president of the Academic Staff Union of Universities, Professor Emmanuel Osodeke, who criticized the introduction of these loans and thinks the federal government should look more towards grants and scholarships for students unable to afford tertiary education. On the program tonight, we speak with Honorable Tese Ubo, who is the chairman ad hoc committee on student loans in the House of Representatives, who disagrees with the view of the professor. Honorable Ubo, welcome to Hard Copy.
Thank you for having me.
Well, I know that in many quarters, it does seem like the idea of loans at all, not even student loans at all, you know, not to talk of student loans, hasn't quite settled in. People think that it is really unfair for the generation, at least two generations before this generation, that enjoyed, some of them even, not just free education, but also free feeding. In schools, should now ask another generation to not only, go to school, but also to pay tuition, heavy tuition in form of loans for schooling. Have we been able to really tackle the idea of introducing loans into our tertiary education system?
Yes, I think we have. Thanks for having me again. In the 70s, Nigeria introduced the student loan system, and it worked for a few years until we found oil around 77. And we thought, it was a bad idea to continue to do loans because we had so much money. So government kind of scrapped or moved away from the student loan system and then introduced the free tuition system, scholarship system from about 77. And that went all the way till today. So Nigeria has over the last maybe 50 years practiced this free tuition system. Free education for basic education, for public schools, and free tuition for universities. So that means our education system has been subsidized for over 50 years. And at the time we introduced this system, our population was maybe around 50 million. Less than 100 million. We had less than 300,000 students in higher education in schools at the time. Now we have over 3 to 4 million students in universities. We have almost 1 million students every year trying to come into university education. Our population is much larger. The cost of higher education has got much higher. Schools around the world have very cost-reflective education systems costs. Nigeria is one of the cheapest countries to acquire a degree in, apart from maybe the Gulf Arab countries who have so much wealth to just share around. But in terms of countries with our level of development and economy, we are the cheapest around the world, even in Africa. Even in neighboring African countries, Nigeria's public education is the cheapest you can find anywhere.
You've done that research?
Yes, we have. We've done that research as a committee when we were looking at the Student Loans Act that was passed into law by the president when he assumed office in June or July. And, so we did a study of Ghana, South Africa, Kenya, Senegal, then of course internationally, the US, Canada, and several European countries. And we did a comparative analysis. And obviously our school tertiary education is really cheap here. It's not as bad as it looks because our graduates do very well when they go internationally. So it's not like they're not impacting, or the education is not impacting, but the quality has dropped, so much that every average person, every average lecturer, every average student will tell you how difficult it is to acquire a degree in Nigeria with the kind of learning conditions we have, overcrowded classrooms, light problems, you can't read at night, and things like that. Infrastructure is just down, labs are down, libraries are empty. So the quality has really dropped. But it is also, you can just see a direct correlation with the low fees that we pay in Nigeria that hasn't really helped. And then there's a high dropout rate in the country. Nigeria has one of the highest dropout rates from schools here. And why do we have a very high dropout rate? School fees. Many students are unable to pay school fees. So after 100 level, 200, some of them even at 400 level.
So even despite how low it is, a lot of people are still unable to afford the fees.
Yes, a lot of people are still unable to afford the fees because it's not just about the fees, the accommodation, your feeding, your books, your transportation to school every day and back, and so many other things that go with acquiring an education in a university setting. Many students just cannot afford this, so there's a very high dropout rate in our education system. And these are some of the things that we think the student loan system scheme will come and help to address.
How do we think that the student loan scheme will help? Because I think what you've talked about is the funding of universities. How do we think that the student loan scheme will address funding for universities?
It's a win-win situation for both for the students and for the universities, and even the lecturers themselves. If we have a student loan system that addresses cost of education, and so students at the point of finishing secondary school are sure that they can acquire a higher education through a student loan system. The monies that the government gives to students as student loans are paid directly to the universities, not to the students themselves. So the monies are paid to the universities, and from those funds paid to the universities can then look at their books, and from there, invest in their infrastructure, invest in better teaching aids for the lecturers, and even invest in quality and more better lecturers. So it's a way of the schools also getting income for their own activities. And don't forget, like you mentioned, the school fees will likely go up to be more cost reflective. We did a sample study of the cost of universities, acquiring a degree here. Social sciences, for example, averagely between 70,000 naira per year to 120,000 naira per year to read a social science course in the country. So that means if you're studying a 4-year course that's a social science and you're paying 70 or 80,000 naira, that means in 4 years you would have spent less than 500,000 naira for your school fees. Medicine, average between 220,000 to 400,000 average. This is not I'm talking about between state universities and federal universities. So that means if you're studying medicine and you're paying 250 per year, you spend 1.25 million, less than 1.5 million naira to study medicine for 5 years in the country. This is absolutely the cheapest. You can study medicine in any reputable university anywhere in the world.
We're looking to increase or reflect the true cost of education in our tertiary system, but we're not looking at the true cost. I mean, the real cost of, or the real wages that people are earning within our government system. And that, for instance, if you're looking at the wage, what is the current wage now, minimum wage of a parent who maybe is earning the barest minimum, as it were, and then you say, oh, the person has a child in university. How do we intend for these people to look at their wages vis-a-vis what it is that we're going to be charging in the university system? Are we really being realistic with our entire economical system?
Well, the average wage in Nigeria is low, no doubt about that, especially in the public sector. Minimum wage 30,000 and things like that. But there's another side to it, because there's the private sector and there are students who currently come from homes where their parents can afford to pay school fees, even in private universities.
So what I was looking at more is the fact that you emphasize the fact that our education is one of the cheapest, and in the world is one of the cheapest. You say even in Africa. What about our wages? Isn't it one of the lowest in the world? So aren't we pegging the fees that we currently charge in universities with what it is that we pay parents, for instance? Well,
the whole idea of repayment of the loans, is where I think this conversation needs to look at. If a student gets a loan of ₦1 million, for example, to go to school, this is probably 10 times what maybe the average parent earns, earning a minimum wage. So if a parent earns 50,000 naira per month, that means to take him several months to even get or save up what one child will need to go to school. And if this parent has 3 or 4 children, then his salaries can just not afford to pay for university education for his child. So it will be a daily struggle, a monthly struggle to afford. What the student loan program does is that it takes away the burden to pay for school fees upfront. Most universities require that you pay for your school fees, maybe either you pay per term or you pay per year and things like that, but the parents earn monthly. So if you put together the total earnings of a parent in a year and the total school fees that the child needs to pay annually, then it almost balances out. But a parent cannot afford to pay school fees in bulk upfront. So the student loans program comes to take away the burden of paying upfront. And it puts the responsibility of payment on the student himself at the point of graduation. Though there's another aspect to it that we're recommending, that parents can actually take out the student loans themselves on behalf of their children. So what it means is that if a parent earns 150,000, for example, monthly wherever he works, and takes a student loan of ₦1 million for a 4-year program for his child, that parent can then commit to pay out of his or her own salary for maybe a year, and in 1 year, the parent can clear up the student loan that the child had taken to go to school. Unlike the other aspect where the child himself or herself can take the loan himself or herself, go to school, graduate in 4 years or 5 years, do the NYSC program, have 1 year, free period to get a job and stabilize and settle down, and then start to pay the student loans. And the way it is structured, we're looking at a minimum of 10 to 15 years payment period. So if you took a loan of ₦1 million or even 1.5, it will take you something like 10 years to repay if you are paying an average of 150,000 naira per year. If you divide that into months, then it costs you about 10 to 15,000 naira monthly to pay up your student loans. So we, in our analysis, we think that if the requirement to repay your loan is 15,000 naira or 10,000 naira monthly to repay your loan after graduation, and then you have 10 to 15 years to repay this loan, then it shouldn't be too much of a burden for any graduate in the country to be able to pay your student loans if you have a 10-year period to pay, except you absolutely don't want to pay, or you have a unique circumstance where you couldn't find a job for 10 years after school. And then there are options where you could go back to the student loans board to ask for a review of your student loans, ask for more time, ask for rebates, or even ask for forgiveness if the government feels that your case is unique and you need the forgiveness. So the whole idea is to make it as easy and seamless as possible for parents and for students to repay these loans without criminalizing non-payment, but basically putting incentives that will require the parents or the students to pay back the loans after graduation.
Well, you're certainly thinking this through again, and I know that that's why your committee was constituted, because a lot of criticism greeted the bill after it was signed into law by the president. A number of people felt that this was an unworkable law. This was something that was not going to be useful to a lot of people, especially looking at some of the conditions that were initially envisaged. For instance, people should be earning at the minimum 500,000 naira. Has that been changed now? Yeah,
of course. We've completely expunged that requirement because it just doesn't add up. Parents earn maximum 500,000 annually. So that means that if you earn just 45,000 or 42,000 or something, then your parents your children automatically are disqualified from getting the student loan.
And then what about all the people who need to sign?
Guarantors.
Guarantors, because people are saying, how are you going to get a lawyer? Who is the civil servant who's going to be signing on behalf of people who needed these loans? What are the alternatives that are now being explored as the alternatives?
Of course, the Act talks about indigent students. So this student loan is targeted at indigent students who cannot afford to pay for higher education. And then you're giving indigent students a requirement to go look for lawyers that are minimum of 10 years at the bar, for a civil servant at level 12 and things like that. So we've completely knocked that off because we did a focus group study, and this was one of the main issues that 80% of the students raised about they're not able to find. In fact, they gave examples when they had other programs, scholarship programs, where these requirements were there to bring guarantors, and how many of the students had to travel across the country looking for people who will sign these things for them. And so we completely raised that option. As students, as long as you're 18 minimum, at the time of graduation, you are over 18, which we expect that every Nigerian student, at the average, will be over 18. So you're a student, so you're responsible for your student loan. The responsibility to pay back the student loan is on the students, not on the parents. The whole idea of guaranteeing the loan by a guarantor is just so that we can trace you, we can trace your background, we know who you are, and if you abscond, or you willfully decide not to pay the loan for whatever reason, then we can trace you maybe back to your family background and send you reminders and send you notifications for your default on your loan. Now, if you decide to willfully default, then the loan will be there in the credit bureau and it will continue to acquire interest. And if you don't pay these student loans for 20 years, maybe, then one day you might have a need to maybe run an election or a need to get a job, and your student loan credit history will come back to haunt you.
Well, Honorable, I know that you mentioned that you went to a number of countries, or at least you did some research on how this has been done in a number of countries, and even you just mentioned Bayelsa, that this has been practiced in Bayelsa, so you are confident that the success rate might be higher. And you've also mentioned the fact that we used to have this until we found oil. And interestingly, it does happen that the new law on student loans is actually a repeal. I'm looking for, it was an act to repeal the Nigerian Education Bank Act, Cap 104 of the Federation of Nigeria 2004. So it does seem that we've had something in place which should help students before now. Why are you very confident that this will work this time around?
Well, I just think that, the world has moved, more towards more sustainable economic practices, more sustainable ways of achieving results. You talked about Bayelsa. We took a case study of Bayelsa. In fact, they came to Abuja and participated in the legislative summit we did on student loans. And they provided figures and data of how well their student loan program has done in Bayelsa over the years. And from that data, they've achieved maybe 90% recovery of their loans they've given out to students, to Bayelsa State indigents who are
How long have they been practicing?
I think they've been on for 8 years now.
8 years?
So yeah, I think about 8 years they've been on. And they've done the student loans program successfully. The Bayelsa State government has continuously funded the student loans program. They've been able to recycle the funds that have gone into the program, and other children are benefiting from the student loans program in Bayelsa. This is just one Nigerian state, so we have to look inwards to see what's happening locally, and we found Bayelsa, and we took some examples from there. In fact, the Student Loans Act that was passed into law, the original version that was designed before the current version was signed, I've seen it, and it was modeled very closely to what Bayelsa State government had been doing for several years. But of course, we also looked at international models. The American model, the Canadian, the Chinese, and several European countries. America is the only country that we found that has this situation where, loan forgiveness for student loans and things like that.
So there might be a high default rate in America, but that's not to say that there are not other places where students find it a burden to repay. I mean, for instance, in the United Kingdom, it's still a problem. It's
not a problem in the United Kingdom as it is in America. It's not a problem in Canada as it is in America. It's not a problem in China, in Asia. In fact,
it doesn't mean that it's not a burden on those who actually take on these loans.
Well, they've had the student loan program for 70 years, and they've run it for 70 years consistently. Most of the Western countries have run their economies, their education system on loans for many, many years, and they've run it successfully. The countries have benefited massively from it. They've been the downside. You talked about the pros and cons. They've been the cons, which is the high, default rate, the burden on students at graduation. But the pros of it is that the education system has been strengthened. More children have gone to school. More people have studied courses that are more relevant to their economies. Because one of the things we've noticed in Nigeria and the Nigerian system, 80% of our students go to school to read social sciences, political science, sociology, and so many social science courses. We're not reading sciences. The admission for engineering courses for medicine is dropping drastically because of the cost of education. With the student loans program, more students can study sciences, can study technical courses, professional courses that add more value to our economy. So providing that opportunity to improve even the quality of education, the type of education that makes them more employable and more relevant to our economy, the student loans program can help to plug that gap.
I find it interesting that you tie the reason why students are not reading sciences to cost of education. Some people will disagree with you. Some people will say it's not the cost, it starts from the foundation. If the foundation is weak and students are unable to make some of the cutoffs that are necessary for these courses, you might find that they will not be able to read it. Social sciences is where they most likely will go to.
There's a variety of reasons why students will read more of social sciences than the sciences. And like you said, it starts from the secondary school. But from our studies, in many of the private polytechnics, the state universities, the federal universities, from what we did, what the studies we did when we were analyzing the entire situation of education in the country and how we can get more students to study, professional courses, sciences, we found that cost was a factor. We think that a student loan scheme in Nigeria will cost at least 1 trillion annually to fund successfully and carry every student along, both students in the private schools and the public schools.
Well, where is the source of funding for that going to come?
The Act proposes that 1% of every income in the country, from FIRS, from the customs, from the oil sector, 1% of every revenue that comes to the federal government is dedicated for student loans program. And when we did analysis of the 1%, based on our revenue income for the last 2 or 3 years, we found that 1% at the time came to about 500, 300 something to 400, maybe 500 billion naira. This is 1%. Now our budget has gone much higher. 1%, could be higher based on revenue inflows from all these sources. But we anticipate that to do a proper student loan program that carries majority of the students that want or require student loans, then we'll be looking at about 1 trillion or more annually, which we don't think is impossible because the United Nations actually recommends something like 20% of your budget should be spent on education. Nigeria is hovering around 6%, 5%. We're always in the low. Even in Africa, even in Ghana spends like 17% of their budget on education. South Africa spends about that too. So Nigeria, in our level of development, we are one of the lowest in terms of spending as a ratio of our budget on education. Why that is so, we have just too many problems, so we usually don't budget that much for education. So budgeting 1 trillion out of a 27 trillion naira budget for education to fund students, tertiary education in Nigeria is not too much. But then there's another angle to it too that maybe we'll get to. The angle of the total amount that government is paying ASU lecturers, university education lecturers in the country. So if you look at the total amount that government pays ASU, the lecturers in the university, public universities, it's over 1 trillion annually. So if government is paying university lecturers over 1 trillion naira every year on salaries and wages, then obviously that means there's a pool of fund going into the education system, but it's going to payment of lecturers. And then there's TED Fund, who spends 100, 200, 300 billion annually on infrastructure in the schools. So the students are the only aspect of the school development that are left to themselves. Once in a while scholarships, once in a while grants, but the lecturers are paid. TED Fund for infrastructure, nothing for students. Right?
So your committee is done with its work?
Yes, our committee held the legislative summit on student loans a few months ago. We came up with our recommendations in the report that has been laid on the floor of the House. Now it is awaiting consideration, but in the meantime, we're engaging with the executive arm of government to see how we can harmonize our reports with their own suggestions because their own committee, led by the central bank, also participated in our summit. They presented a memoranda for our committee. So we looked at what they are recommending, and of course we tried to make sure.
Who is recommending, sorry?
The central bank.
Okay.
Because the current Student Loans Act puts a lot of responsibility with the central bank to set up the student loan program and manage it and things like that. So we thought that the central bank are not the right agency to manage student loans. There should be an independent board called the Student Loans Board or something like that to manage student loans in the country. And there should be an executive secretary with board members reporting directly to the presidency or the Ministry of Education to handle student loans affairs in the country.
Interesting. Well, as they say, the taste of the pudding is in the eating. How quickly do you think that this will eventually be put to the taste?
Well, I hope that the executive, because they are the ones that are implementing, and I know that currently they are still trying to work around the current Student Loans Act. I know that even the president, during one of his speeches at the Independence Day speech, talked about removing a lot of the requirements and the encumbrances for assessing the student loans. So I think they are also thinking in that direction. The way we are thinking in the National Assembly, that all those requirements should be wiped away and better.
But you're unable to say when it's going to start?
Well, 2024 has been given as a date. It has been budgeted for. Obviously, that means it's going to start in 2024.
But you don't know when, precisely?
I cannot tell when exactly the first loan will be given, but we'll hope that at least in the first quarter of 2024, the first loan should be issued to the first students who will be a beneficiary.
Honorable Tese Ubo, well, we'll hope to keep up with you in the new year to see how that eventually is implemented and when it eventually starts implementation. But we have to thank you very much for coming on Hard Copy tonight. Thank
you very much.
Well, that's the program tonight. Your feedback is always welcome to the handles showing on your screen. Thank you so much for watching. I'm Maokwe Ogun Yusuf. Good night and Merry Christmas.